What tax forms are needed for REIT and MLP dividends? Imagine you just received a big box of investment statements in the mail, and you're wondering what each one means for your taxes. Well, understanding the right forms for real estate investment trusts and master limited partnerships can make your tax season much smoother. Let's break down what you need to know. When you get dividends from real estate investment trusts, or REITs, the main form you'll see is the Form 10999-DIV. This form reports all your dividend income, including ordinary dividends, qualified dividends, and any capital gains distributions. Since most REIT dividends are not qualified dividends, they are taxed as ordinary income, but there is a catch. Under current tax law, you might be eligible for a 20% deduction on qualified REIT dividends, which can lower your taxable income. Now, if you own master limited partnerships, or MLPs, the forms you receive are quite different. You will get a Schedule K1, or Form 1065, which reports your share of the partnership's income, deductions, and credits. Because MLPs are treated as partnerships for tax purposes, the income is passed directly to you. The Schedule K1 shows your distributive share of income, which can include ordinary income, capital gains, and even return of capital components. This is where things get a little more complex. MLP distributions are not taxed as typical dividends. Instead, they are considered pass-through partnership income. This means you need to report the information from the Schedule K1 on your tax return carefully. The form can include various types of income and deductions, so it might take some time to understand what applies to you. If you own multiple MLPs, the process can become more involved, and some investors choose to work with a tax professional. Timing is also important. For REIT dividends, you usually receive the Form 10999-DIV by mid-February. But the Schedule K1 for MLPs often arrives later, sometimes in March or April. This delay can affect your tax filing schedule, so plan ahead. In practical terms, if you're investing in REITs, expect to get a Form 10999-DIV, which makes reporting straightforward. For MLPs, be prepared for a Schedule K1, which requires more attention and possibly extra help. Knowing which forms you'll receive helps you stay organized and ensures you report your income correctly. Being aware of these differences can help you make smarter, tax-efficient investment choices.